It is Tuesday, October 12th, 2021. I am Ashley Pollard here for today's edition of Tuesday Talk, where we review common real estate and mortgage related terms. Today's term is a reverse mortgage, and a reverse mortgage is a type of home equity conversion mortgage that is made available to elderly homeowners. Now, elderly homeowners or retirees typically have limited or sometimes no income at all, and a reverse mortgage allows them to keep their home without having to sell. How does it do that? Well, the homeowners can tap into the equity that they've built up into their home and use that equity as cash. So let's go into kind of why it's called a reverse mortgage and some other notes on it. So a reverse mortgage is called a reverse mortgage because unlike a traditional mortgage where the lender is receiving payments from the borrower, in a reverse mortgage, the lender is making payments to the borrower. So hence reverse mortgage. There are no repayment requirements unless the homeowner no longer occupies the home. This usually is a result of death or the sale of the home if they decide that they actually do want to move out later on. The other instance where the loan would be due in full is if the homeowner can't keep up with taxes or HOA fees or anything like that. So those are two requirements there. The requirement to receive a home equity conversion reverse mortgage are that the borrower must be at least 62 years of age, they must be named on the title of the home, and they also must use the home as their primary residence. So you cannot get your grandparents to do a reverse mortgage on your house unless they actually live in that home and they're on the title, just in case you were thinking of that. A major advantage to having a reverse mortgage is that the borrowers can use the cash for whatever they want. There are no restrictions on what they can or can't use that money for, but it's not a great option if you plan to leave your home to heirs because the loan is due in full once you no longer own the home. So, or you no longer occupy the home. So whatever your heirs think they're going to receive, they're going to have to subtract the amount that the lender is due, and then they would receive proceeds from that, if any at all. So it's something you definitely want to consider depending on your familial status. There's more information available at www.reversemortgage.org, or you can also reach out to your loan officer. If they're not well versed in reverse mortgages, they can probably connect you with someone on their team or someone on another team who is well versed in reverse mortgages. You don't just want to talk to any loan officer because if they're not processing these types of loans on a regular basis, then they might not be able to handle your loan properly. So reach out to me if you have questions. If you need to be connected with someone who specializes in reverse mortgages, I can connect you with someone who is well versed in that. And thank you for tuning in for today's term. I hope you learned a little bit of something and enjoy the rest of your week. I think we're supposed to have really great weather, 80s on Friday, so summer is not over yet. Enjoy, have a great evening, and I will see you next Tuesday.